Hi, this is Randy Finney with the right side of the chart, and today is Thursday, February 8th, 2018. Wanted to go over, share some trade ideas with you. And before I do that, I wanted to reiterate what I've said throughout the week. Um, and that is, I'm keeping, I wanted to watch the markets this week, see what happens, let the dust settle. I do have the amount of trade ideas that I have on my scratch pad is continuing to grow. I could fill up 2 pages of a full size notepad here with the trade ideas. There's just a lot out there. Finally seeing some clear developments, breakdowns, a lot of trend lines that whether I'm talking longs and shorts, and obviously a lot of it the success of the longs or the success of the shorts will depend on what the broad market does. But I wanted to just continue to reiterate, I'm letting the dust settle this week. That's why the trade ideas have been on the light side recently. We closed out a lot. We had quite a bit going into this. Closed out a lot of trade ideas recently, especially those on the short side. And as I said, you know, usually, well, I can tell you, I've seen this many times over the years. When there's a very sharp drop in the market, especially after a period of low volatility, you get this you get this period of back and forth choppy action for a while. And so by sitting back and quote unquote letting the dust settle this week, that means I'm reluctant to put on official trade ideas, both sharing those on the site for you guys, as well as my own trading. And the reason is this: you're going to run a much higher chance of getting stopped out, even if you're right on the trade. I'll use an example. Let's say you're looking at a stock, we'll call it XYZ. XYZ selling at 100 a share. You're targeting a $10 profit target, so you want to sell it. You think it's going to 110. You're going to allow yourself a $3 loss. It's a little better than a 3-to-1 risk-reward ratio. Well, just in the day-to-day grind of this market, uh, even if that stock heads to 110 over the next few weeks, there's a good chance it might dip down below 97 before it gets there. So that's what I'm talking about, an increased risk of having stops run, even if you get the trade right. And that's just the nature of this back and forth grind. And as you all know, if you've been trading for a while or investing, or even if you weren't in the markets, you probably have heard, we're coming off an unprecedented extended period of uber low volatility. And the VIX was at all-time lows. There was something called the short vol trade, which is the institution shorting volatility. Um, so we had record low volatility in the market for some time, but with that big, swoon down and the huge biggest spike ever in the VIX last week or earlier this week, that has now, in my opinion, probably permanently broken that trade. It doesn't mean we won't see the VIX go low again and down to the low end of its range, but I think that short vol trade is for the time being over, and so we can expect an increased level of volatility, and that's good for swing traders. And if you're a very active, nimble swing trader or even day trader, there's tremendous opportunities to be made in this type of day-to-day grind that we've had, these up and back and forth moves. You can day trade off the intraday charts. Um, Technical analysis tends to work phenomenally when there's a lot of volatility like this. And the reason is when the market has a sharp sell off, everything's bouncing around. At that point, the near-term focus for both individual traders, even the big institutions, they're not looking at fundamentals. Oh, well, Apple has a blah 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 product coming out that's going to put, do XYZ to their bottom line over the next six to 12 months. That it's longer term important, but when the market's moving fast, these buy programs, as well as traders like myself, you have stop loss orders set at certain levels, you have buy levels. What they're doing is they're buying dips to support, they're looking at trend lines, support levels. Stocks are bouncing off those levels, even if it's just temporarily. That's been my experience, and we've seen it recently. So, technical analysis works great, but it's very fast. And a market like this, over the last week, in and out within the same day is probably your best strategy. Now, if that is not your cup of tea, if you're not experienced and you don't have that comfort level or skill set, step aside. There's no reason to, rush things. There's going to be plenty of money to be made in this market over the next year. In fact, I'm excited because we've finally broken that slow, steady grind. It's great for trend traders, investors, or buy and hold investors, but swing traders need volatility. They need the market dropping, pulling back 10%, running up 20%, even 5, 10% moves back and forth. And remember, if the market drops 10% or goes up 10%, if you pick the best stocks within the market or the best sectors, even but with ETFs, you're likely to do double that. So again, let's just take a look at the last. This is a 15-minute chart of QQQ. And if you note here, I'll just grab these. These are daybreak marks, each of the vertical lines. So going back, this is in December. So you see we were up. If you look on the bottom right of that pop-up box in the green, you can see 0.96. So we're up about 1%. The next day we were up about 0.2%. Then we're up about 0.2%. We had a pretty big day, relatively speaking. It was about a 1.2% gain, and that's it. Now, this is where volatility opened up. So we zoom in. So the average move back then for a long time was the market was moving up or down less than 1% a day. And since the fireworks started, we had a gap down here. We gapped down, 1.24% on the 5th. We had a pop of 1.5% in the morning, which is more than actually a little more than that. 1.5% pop in the morning, almost 2% pop. And that was then followed by a drop of 6.43, so about 6.5%. Let's see. So the next day we opened up somewhere here. You can just see, we've had 2.5% down, 2% up. So in this, it's starting, that volatility is starting to abate now, and I expect that to continue to do so going forward. But I think the days of these 0.4% up and down days, trading within a 1% range, I think that's over. So going forward, and I'll share some trade ideas this week. I'll start to add more and more trade ideas. I just want to let you know right now, best to stand aside, especially if you're not a very nimble, active trader. But there are going to be a lot of opportunities now because the charts, there's just so much I'm seeing in the charts now that I didn't see for the last one or two quarters. Going back 6 months from now, there were not many great chart patterns, and those that we did have, we had a lot of bearish topping looking patterns, trend lines, divergences, but they weren't playing out because the market was in that slow, steady up grind mode. So let's go ahead and dive in. I'll share a few trade ideas. And as I said, a lot of these or some of these will become official trade ideas soon, very soon. And if you prefer ETFs, I plan to put a mix of ETFs and individual stocks. Personally, I trade both. Um, if you're new to trading or investing, ETFs, they do provide you some, an additional measure of stability, if you will, and diversification because they hold a basket of, 20, 30 or more individual stocks. So you don't have the big risk that you do with an individual stock for earnings and, earnings beat or a miss or anything like that. On top of that, we're winding down. We've passed the peak of earnings seasons now. There's still some to report, but just keep that in mind. Always check your positions for earnings, and there's an earnings calendar on the front page of the site under Tools of the Trade. So now this is the broad market QQQ. As I mentioned, we may or may not make. I laid out a scenario, and I still can't rule it out. I really like to see to go long for a swing trade. I love to see divergent lows on the 60-minute time frame, and so I laid out a scenario recently that would have us going down here, slightly undercutting the recent lows. In doing so, making a lower, equal or lower low on QQQ and SPY, but then putting in bullish divergence. I can see it in the charts. It looks there's certainly the potential there, so we can't rule that out. Now, as you guys know, the other day when we snapped back up, even when we were under those trend lines, I went bullish. I said I think that was it. And as selling, I thought we'd snap back above the trend lines, and we have. Now, keep in mind, this scenario would take us back below those trend lines. However, if that scenario plays out, and at this point in time, although anything's possible, this is my most bearish scenario. But put, I'd put decent odds on it, not great odds, but decent odds. Maybe, I'm not, it's hard to quantify it. But I just want to point out that'd be about a 3% drop, right down there. It's about 2.85% from where we are now in the Qs. So if we undercut it, maybe we undercut them by a small amount, 3.25%. I just want to try to quantify that. That's not that it depends on your trading style and how much you're willing to allow on your stops. But if you're trading the broad markets, if you bought on was it Monday and when we had that swoon down, or was it Tuesday? If you bought there or anywhere even up here, you're talking another 3% downside. And again, what that would do, like I said, that will take us below these trend lines again. And that'll be a little bit scary because these are pretty significant trend lines. But maybe we do it in it's an intraday break, just like we had here with another stick save, meaning the Qs reverse and then print a candlestick close back above there, a daily close. Or maybe we even close below there one day. That's not unusual to see a breakdown that only lasts a day, sometimes two, and then snap back up. So that's still my preferred scenario is that the downside here is maybe 3.5% or so, and then I think we get a bounce and a tradable bounce, and then I think at some point in the coming months we'll be set up for a another nice shorting up, and that might come sooner. And like I say, I try to stay flexible. Anything's possible. So if this market just turns around and melts down, that with that volatility trade broken, a couple of those short volatility ETFs blown up, maybe that has some ripple effects down there through there. I'm looking at some of the financial stocks and I'm not liking what I'm seeing on those charts. They're the ones that come up with those instruments. And of course, with XIV, they had it very craftily worded in there, so all the losses were put upon the shareholders, not Credit Suisse. But who knows? Maybe there'll be some class action lawsuits piled up against them. All right, so there's QQQ, same story with SPY. So far, we've held the trend lines, regained those trend lines, and if we drop on SPY, let's look at a 60-minute chart. Again, to match those lows, you're talking about 2.75% from where we're at. Undercut them again, 3.5%, something like that, and that would have the potential to put in divergence. So um, I'm remaining, yeah, let's say short to intermediate term bullish until unless we just collapse. We go through those trend lines, print a solid impulsive red candlestick down, close below those daily trend lines. That's my scenario, and I wish I could tell you, whether we're going to go that far and then step in and buy, or whether we're just going to turn around any minute now and continue up. It's just I just can't see it in the charts. Okay, so many stocks, so little time. I spent probably more time than I should have trying to convey my thoughts, but I think it's important. Again, it it speaks to the fact that you at this point in time you just don't want to engage this market too aggressive, long or short, because it can still go either way. At least by my read. I don't think we're going to melt down, as I said. I see minimal downside before a tradable bounce. However, there was a lot of damage done to the charts, and I don't think that we're going to continue to go up another 20, 30% in this market before we have a significant correction. Let me just say that. I think the upside is limited to, well, I don't want to quantify it now, but I don't think we're going to see the next 20 or 30% to the upside. All right, before another swoon down. AOBC, one of my favorites. I've mentioned this one a couple weeks back. When it was back here, I said I wanted to see it fall to this level. There's a big gap that's now been backfilled. I'm just jumped out to a 2-day period chart. This is 4 years. You can see there was some horizontal support here and a nice gap. We hit that level. Nice positive divergence here on the on the PPO and the RSI. See the bullish divergence. It needs to be confirmed. We need a a bullish crossover here. And I took this one personally the other day, and I'm probably going to add this one as an official trade idea. But again, I just gave you the reasons that I haven't been adding a lot. I threw on that natural gas trade the other day. They just barely clipped the stop on that one, and of course it's turned around. But I'll put an update on that later today. So here's AOBC. I should probably add another target there. All the lines that are marked with levels are potential price targets on this one. And of course, this is probably the most significant level, this downtrend line. So what you have is a bullish falling wedge. You have the stock at support. They do report earnings March 8th, so a month from today, earnings, but I like that one. And that is, by the way, that's the old Smith& and Wesson Corp. They rebranded themselves. It's not just firearms anymore. They do other types of sporting outdoor equipment. So I like the fact that it diversified away from just purely a firearms maker. Here's another long PSDV. This is a specialty and generic drug manufacturer. You can see the divergence here. It looks like it might need one more thrust down. Just looking how the indicators, we've made a bearish cross. PPO is pointing lower, so maybe one more thrust down, but I like that. It looks like a bottoming play. Now, keep in mind, it's flirting with that $1 level. That's an important level. Um, Companies face delisting if they trade below the $1 level for too long. Often, what they'll do is they will try to defend it. Sometimes the insiders will come in and buy with their own money to try to prop it up, or they'll do a reverse split. But either way, the charts are fairly bullish. And if I look at the weekly chart, as well, you can see there's long-term support here at this level, this $1 level. That's where they defended it in the past. Um, but again, anytime you're trading a stock, especially under $5 a share, and most importantly, down around a dollar, there's a lot of risk in there. So be careful, do your own due diligence, and don't put too much into something like that. Speaking of UGAS, I told you the stop was just run. I added this one earlier this week. Let me get these lines off here. Date grid lines, I don't want to see those. There's the stop, 59.59, just took it out. We're still, now we're back above it. So that's officially stopped out. I'll remove that as soon as possible on the front page. But they still have bullish divergence here. And on the natural gas chart, I'm referring to the futures. You can see here, these are NG, the March contracts. And you can see this line right here goes back a ways. So it's at support, still has bullish divergence. We may get a pop. I also made the case, and we're seeing it now, that seasonality chart that I posted before. You get the run up in the end of the year, either November, December, sometime early January when the weather's cold, and then you get a sell off that very often fades the entire rally. So that may be in play, and these divergences might not play out, but it's an objective entry. When I see a security fall, oversold, falling down to support with bullish divergences, I'll take a shot. So I gave my position a little room. I'm actually trading NG, not UGAS, but this one will be taken off. But I just wanted to point it out. If some people, the suggested stops, the price targets, everything that I post are just ideas. It's what I'm watching. It's what I'm trading. You take it if you want it. Don't take it. Use your own stops. Use your own price targets. But I did want to update that for those in it. OSTK. I'm kicking myself for not reversing at T2. This was, recently a short trade. It's actually we've traded this one twice now. The previous trade was also a double-digit gainer. We've traded this one a few months before this last trade. We caught this one here, exited right at the lows. As I often say, I set my, price targets are set just above the actual support level, and that's where that one reversed. So we nailed the exit, and it would have been a nice bounce trade up to here. You can see that's a pretty well-defined resistance level, this former first target, and that's where it reversed so far. Might get another shot at it, and the indicators are still bearish on this one. This was my proxy for shorting Bitcoin. The only way to short Bitcoin is via futures, and I know most traders on the site or a lot don't have futures accounts or the experience to trade futures. So this was a proxy because they, as you guys know, they don't even they're trying to get away. They're talking about selling their entire online retail operation. They're like a mini Amazon, and the owner of the company wants to get into the, what do you call it, blockchain technology, and that's why it had that explosive run right here. All that was part of the Bitcoin bubble. But as you can see, the daily chart, it wasn't just even though the 60-minute chart was where we based our trade, you can see that divergent high, trend line break. It was all priced in on the daily chart as well as the 60-minute chart. But again, we fell to support. So maybe some trading ops there if you're a nimble trader off those levels. Honeywell, well-defined uptrend line, divergent high right there, breakdown, back test. What I like about this one, this is a shorting op. This is what I referred to earlier when I'm seeing so many charts that are now clearly, either mostly bearish, a lot of bearish charts, but there might be some bounce trades because a lot of these divergences have already played out. On this one, I'm looking at probably really yesterday would have been the time to highlight it, or the day before. You had a well-defined support level right here. See at the 152.55 level, you had a divergent high, negative divergence, and boom, it played out. We took out the 152.55 support level as well as a very, very well-defined uptrend line. So that is what I call intersecting support levels, which are now intersecting resistance levels. And you can see we hit I didn't have it as an official trade, but I had these lines on the chart before, and that one was at 147, 147-ish, hit that support level, bounced back to resistance, fell again back to that support level, bounced again, failed again. So the story on this one, like any short trade, you can short at resistance with a stop somewhat above, ideally on a closing basis. But this is what I'm talking about. See this intraday, this wick here on the candle, that shadow, that means price has shot that much farther, which is, let me grab the line. If I touch it, it'll move, so I have to go to the right of it. It went up 1.35%. So let's say you had a stop right about here, which was, pretty much above there. You would have been stopped out, and that was on that intraday noise. So once this volatility abates a little bit, we can then put on these short trades or long trades for that matter. You can go long here at 147.07 with a stop somewhat below and have a reduced risk of having that stop run on that intraday noise, that intraday back and forth volatility. But Honeywell looks toppy to me. Here it is on a weekly chart. I should tighten that trend line up like that. There it is. So it's broken down on the weekly chart as well. If I Yeah, needed to tighten that trend line up. So that one's on a sell signal, extremely overbought, a lot more downside to come. Here's a potential long Xene. I think I've mentioned this one before, XENE, Xenon Pharmaceuticals. Looks like a level here at 327, which has been taken out. I should put another line right about here. And that would capture these reaction highs, this reaction high, and where it's tapping right now. If we can take that out, it's probably running up here to 423. It doesn't sound like a lot, but that would be a move of about 20% if it gets there. And that one's a biotech stock. Nice divergent low. Semiconductors, this is the one short trade. We had a bunch recently, the one that I did not close out. The charts confirm this is a breakdown. I've been talking, you guys know, for how many months about this trend line. These, I should say these, plural, meaning we have three main semi ETFs that I follow, SOXX. This is just a different board on that chart. This is the bottom of the channel, but it's the primary uptrend line. It goes back for a while. XSD is another semiconductor ETF, and the story is the same on all. They broke down, they back tested, and they're well below the trend line support now. This one's flirting with a key horizontal support level right here. Let me give you that number. And give or take, 67.22, a few cents in either direction. And then SMH is the other big one. And you can see they're all below trend. They all had divergent highs. So this tells me, unless something crazy happens, these are solid breakdowns. I've been waiting for these breakdowns a long time. Semis lead tech. Tech leads the market. So the semis have now broken. Tech is really probably not far behind. In fact, let me take a look at that. XLK, there's technology. It's pretty busy here, but just focus on this line right here, this bottom lower line here. That's the bottom of the price channel or their primary uptrend line. Tech pierced it intraday, but has regained that level. This is why I'm being cautious. But if we see much more downside, you're going to see technology. This is XLK. And if you overlay this chart with QQQ, they look almost identical. You guys have heard me say before, I jokingly refer to QQQ as a tech fund with an Amazon kicker because there's so much overlap between the two. So I have a lot of different boards on QQQ, but again, this is the trend line I'm looking at now. And just like XLK, it broke it intraday. And so we're in what I call a precarious position, technical position. Much more downside, especially if we undercut those lows by anything more than a brief undercut with a snapback. The markets are on breakdown modes, and these are more powerful sell signals. And what I gave you a couple of weeks ago when I said the markets were on a sell signal, that was a break of the 60-minute trend lines, this trend line here. You break this, this is a much more technically significant level, these daily trend lines, and that can open the door to a move down. I'll have to give you price targets if and when that happens, but I could see us coming all the way down here to about 140.85, and from where we're at now, that's a good 10, 11% drop in the Qs. I'm gonna wrap it up there. I had literally, gosh, I'm looking down over 2 dozen, almost 3 dozen trade ideas, and it was just again a fraction of what I have all over my scratch pads here. But this video's gone too long. Like I said, there's just to add these on right now, we're at a pretty important potential inflection point in the market. We need to defend these levels, hold. I would love to see one more rally, um, especially a new high to put that bullish extreme back in the market, clear out some of the short interest that's recently jumped into the market, and then that would set the stage for a very nice swing trade. But again, that's plan A. That's what I'd like to see. Plan B is if we break down here, there are quite a few sectors already on breakdown mode, like I just showed you with the semis and some other things. I'm bullish on commodities; those are doing well, the ag commodities, so we can make money long and short. And as soon as I think it's safe to kind of put our toes back in the water, I'll start adding a lot of swing trade ideas. And I will follow up with some other unofficial trade ideas. For those of you that say, well, Randy, I don't care what your views on the market, I'm bearish or I'm bullish, I want trade ideas, I'll share those. I'll put them up as unofficial trade ideas and targets. And as always, if you're a member, gold member, in the trading room, just drop me a line on any chart you want an opinion on. I'm more than glad to put up a chart and give you my 2 cents on any stock or ETF that you're looking at. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.